You are listening to ChartingWealth.com for Wednesday, the 17th of May 2017. Look at the markets today. We see that the S&P 500 is down just a little bit. The Qs, the NASDAQ 100 is up nicely. Gold is up, and the 20-year bonds are up for the day. Let's delve into these charts, starting on the S&P 500 and the weekly chart. We see that we have our fourth week of up movement is forming, still hasn't crossed over going up, and we see the market continuing to top out right around $140. It is interesting. You go all the way back to the 28th of April, the end of the week on the 28th of April, we see $239.53 was the top. We then go to Friday, the 5th of May, the end of the week there, $239.72. The end of the past week, the 12th of May, we see the market topping at $240.19. Did I say the 5th of April? Sorry, the 5th of May, and then the 12th of May. And then we see so far this week, $240.67 is the top. And of course, it closed at $239.92. So interesting. We continue to see the candles move up, but we continue to see the PPO, the price percent oscillator, drag sideways. The derivative oscillator is losing downward momentum, but no crossover yet. Now let's check out what's going on the two. So is the real question, is the market topping out? Now when we look at the two-day chart, we can see that we're going to have to redraw our trend line there because it has not kept the same upward pace that it had previously, and we will of course redraw that. Remember, when you draw trend lines bottom up, top down, we have a great training at the website chartingwealth.com. We see that it is losing upward momentum as far as the derivative oscillator goes, and also the PPO on the two-day chart sliding sideways. So just continue to monitor that. Has the market topped out? The broad market is represented by the S&P 500. We're in no trade now because the weekly chart is down and the two-day chart is up. Now that kind of schizophrenia between our two biggest charts, the weekly and the two-day, means that until the two-day either rotates over going down, then it'll be in the same direction as the weekly chart and we would jump in on a down move, or there's enough upward momentum that it actually drags the weekly chart over going up. And if that indeed occurs, then we would get into an up move. And we will be happy to let everyone know when that occurs, both, of course, on this podcast and also via our text messaging offer that we have. Of course, everything we offer you here is free. We don't spam or use any of that information. We don't use it for anyone else. And we will send you, if you text to the number 33222, the word Charting Wealth, that's our name, one word, Charting Wealth. If you will text that word to the number 33222, we'll put you on our list with the hundreds of other folks, and we will let you know the minute that a weekly vertical crossover occurs, like it did, and we'll go to our next chart, show you how well that works, like it did on the Qs. That is the NASDAQ 100. We had that weekly vertical crossover take place at the end of the week on April the 28th. And of course, we jumped in that following Monday. And we'll go to the two-day chart. And of course, we jumped in on that Monday somewhere around $137, or I'm sorry, that was the high, somewhere around the opening at $134, $135. Of course, where did that market close today? Up almost $5 at $139.41. So again, not bad, not a bad appreciation over the course of just a little over 2 weeks. And again, that's how our weekly vertical crossovers typically work. When we see that kind of momentum swing, enough momentum to push the market up on that weekly chart typically means that getting in the following Monday after what we call idiot hour, that's when the market makers have a lot of control and all the people who've very unwisely put in market orders are at some point many times taken advantage of or end up paying a whole lot more than they should or getting a whole lot less than they would have if they'd have put in some type of order that simply wasn't a market order. They would have they would have fared much, much better. Market makers are given a lot of leeway when the market first opens. That's why we let things settle out. Then we look to get in at 10:30 if our 2-day chart and other things are looking good at that point. You can learn more about that with all the training that we have at the website, chartingwealth.com. So let's continue. So we are in that up move, and it has done very, very nicely for us. We will continue to monitor that. We do see that the 2-day chart is losing some of its upward momentum as far as the derivative oscillator goes, so keep an eye on that. But the PPO, the price percent oscillator, is continuing to move up very, very nicely for us, and we like to see that. Also need to redraw that 2-day trend line. It's not moving up at the same angle that it was, but still moving up nicely. We will continue to keep an eye on the chart. Going back to the weekly chart, quickly moving through the other two, we see that our TLT, that is the 20-year bond fund, is continuing to lose upward momentum as far as the price percent the derivative oscillator goes on that weekly chart. Still in a confirmed up move on the weekly chart. But as we delve into the 2-day chart, we will see that it crossed over back on May the 1st, has gone down until it bottomed out around the 11th, and then started moving up, breached that 2-day trend line, has not yet crossed over going up, but if indeed that occurs, don't forget our weekly chart is still in a confirmed up move after that weekly vertical crossover all the way back in early January. We had a nice up move for a little while, dropped off, and then shot back up again for us. And we'll see if we have a crossover sometime. Could happen this week. If that occurs, then we'll look to jump in. Remember also, as you watch TLT and gold, if indeed they turn around, they're typically inversely related to what's going on in the market. Means when the market's not doing well, the stock market, money tends to flow into bonds and commodities like gold. So if that occurs, it's telling us that there is some real market weakness there. Haven't seen it confirmed yet, but we're seeing some signs possibly of that happening. So pay attention all the way around. Now, lastly, let's look at gold, up 0.44% for the day. It does look like on the weekly chart, gold was getting close to crossing over. The price percent oscillator has not yet crossed over going down. We do see that the derivative oscillator has gone into the negative, even though over the past day and so far in the week we have a green candle. We will just continue to monitor. We thought gold would cross over going down at the end of last week. It hasn't yet. It may very well not, but we shall see. We do have a 2-day crossover that's been in effect, and the market has been going down for the last, 3 weeks or so. Maybe not this week. We will continue to monitor. We see on the 2-day chart that it is actually, looks like it could be bottoming out. It breached the 2-day trend line. Now, what have we told you about gold since last week? I think it was last Thursday. We look at that 4-hour chart, which is an unbelievably accurate chart for us. It crossed over, and I'm looking at the 4-hour chart. It crossed over on going up on Friday at noon, crossed over going up on, it happened, a little bit earlier than that. In the after, I knew it happened on Thursday. Crossed over going up on Thursday afternoon at 4. Of course, you saw that confirmed on Friday and has continued to move up. Now, I know that the weekly's in a confirmed up move, the 2-day's in a down move, and it looks like the weekly's even getting close to crossing over going down. But this 4-hour chart is just amazing. If you had jumped in somewhere around that crossover at 1630, something like that, up to about 17, of course, low 17s, it's already reached as high as $17.91, almost $18. That is just wild to watch how accurate this 4-hour chart. Rarely do we see that in this small a chart, but the 4-hour chart on gold is just incredible. I do encourage you to play with that. Now remember, we're not a stock calling service, we're an education firm. We want you to practice with us. And of course, the key here is to practice. I'm afraid we have so many folks that love listening to the broadcast, but if you don't put into practice what we teach, it's not going to do anything for you at all. You can bounce all around the internet, listen to all sorts of fascinating stuff, but you got to practice this stuff. If you don't already have our daily market worksheet that you fill out every day, the weekly market worksheet once a week, and the trade sheet that you fill out when you do a practice trade, you're totally missing out on what's most valuable in what we do. I encourage you to subscribe to our podcast. You can do that at chartingwealth.com. Cost you nothing. No salesman will call. Nothing is required of you. If you do that, we'll send you the broadcast that we do every day. Plus, you'll get a link to our How to Read a Stock Chart video, the layout that we use at freestockcharts.com. Again, all this is free. In addition to that, the daily market, the weekly market, and the trade worksheets are all there. PDFs are available for you to print out. So please take advantage of what we do. It takes you about 10 minutes a day. If you want to get good at this, that's what you got to do. If you don't practice, it'll never happen. How do you get to Carnegie Hall? Practice. How do you get wealthy? You do things that make you wealthy. And understanding how stocks flow, how to chart them, how to see the movement, because it's a binary decision, my friends. Buy or don't buy. Sell or don't sell. And again, it's not that complicated. God bless. We love to hear from you. Write us cw@chartingwealth.com. Be sure to follow us on Facebook, Twitter, Instagram, YouTube. Please subscribe to our channel at YouTube and at iTunes. And give us a 5-star rating. Say something nice about us at iTunes. Thank you so much. All the best. God bless from chartingwealth.com.